Good afternoon, traders. Today's January the 5th. Looking at the E-mini futures right here. We had that high on Monday at 1272. After that, we just been moving lower. You could actually draw a trend line. And then yesterday, as soon as the market opened, you see this yellow line right here. We just sold off, and then the bottom, there was some decent buying in there. I told you guys, as long as we hold above 1262, that's right where this red line is, where my mouse is at. If we held above that, we need to look for more buying. So I started putting on positions right as soon as we approached the 1262. There were only one or two things that could have happened. One being they just continue down, or two, they continue up. So when we broke above the 50 average on the 5-minute time frame, I then became even more bullish. I started adding positions here, and every time we dipped down, I'd add more. Now, what happened today, I woke up at 6:30 a.m., and that's right around here. I saw the market declining in the London session, so I started seeing some consolidation right above the 1256 area. As soon as we put in this higher low around 7:30 a.m., I started getting a little bullish on the markets. Then we held above the 1258, which was yesterday's low. All these are signs that the market's going to rally off the open. So we opened at 1262. Same as here, we were either going to do one or two things, go down or go up, since this is a key support level. If you look back on your charts, this inflection point is very vital to where we will go and where we will end up over the next week. So when we broke above that, the buying started continuing. I started adding to some of my positions and some of my option plays to average down and get a better price, since the value had decreased overnight because of the European selling in the US equity markets. So right now, as I'm talking, we are trading at 1270 on the E-minis. We broke above the downtrend. We have an ascending 50 on the 5-minute chart, and we're back above the 1266 area. And then we're testing yesterday's highs, which we're consolidating over the 1270. It looks like if we could hold above at least 1266, I'd like to see us potentially come down and then move back up to break out of the previous high of 1272 and test our 1275 target. You had some key fundamental analysts from Goldman coming out on Bloomberg yesterday saying that they see S&P 1350 this year. If that's really going to happen, you have to listen to what these guys are saying. They're the smartest guys in the room, just like Enron. And the reason for that is not because they're geniuses, it's because they know information that we don't know. You don't want to listen to everything you hear, because a lot of times the contributors on CNBC will come on there and they'll start saying that they want to get bullish or bearish on a position, and most likely they're holding the other side of the position. So if they could sucker a bunch of novice home gamers into the position that they're in, they could offload it. CNBC has a large following. It's way larger than Bloomberg, since they are on most local stations. But besides the point, now we're going to look at gold futures. Okay, so you guys know that I'm long GDX right now. Today we did slip down a little more. We're down about 5 points in gold, and I started adding my GDX when we were around 1375 on bullion. I'm going to switch to GDX. We must retain this 57.93 level for me to get a sympathy bounce on my call positions and then cash out. I'm not looking for a lot in this trade. I still think gold could move back down to the 13.5 level, and if that happens, you will see GDX approaching the key support level at 56.87. That's where I'll look to start entering my position. Looking at the positions I'm currently in, one, I was in ACAM this morning. I probably should have held it a little longer. It may have some continuation tomorrow, since it is flagging on an intraday time frame. Even it looks like the 60-minute chart's flagging. We are above the 50 on the 1 hour, and all them signs determine a bullish trend. Looking at the calls that I was long, yesterday I bought my calls at 24 cents. and today I sold them around 53 cents. So that's a 96% profit I made in one day. And the key to this is you need to buy things that have overstayed their welcome on the trend, and sometimes it pays to play a contrarian side, especially if all the premium is sucked out of either a call or a put. And this is a very low risk trade, 20 cents. So I had 5 contracts. I'm risking $100, and then I just made $150 in one day. That's astronomical gain, if you ask me. A lot of people don't make this in a month. So when we get opportunities like this, we must take them, and when we get more confident, we have to go bigger sizes. All right, now I'm looking at MT. Let me switch to the chart first. ArcelorMittal, it's the biggest steel producer. It's one of my favorites. They bring in 10 times more money than Cliff. They bring as much money as Cliff, AKS, US Steel, and STLD all put together. Taking a look on the intraday time frame, I was watching this chart yesterday, and when they gapped this thing down, it was a gift from the stock gods. I'll show you the calls that I got long. Okay, so we opened up at 25 cents on the January 52 half calls, and my order was at 32 cents. So I'm long 10 contracts from 32 cents. I paid $3.20 for them, and if you go up here now, we hit a high today of 62 cents. Just the possibilities, if I would have sold at 62, that's $300 that quick. Just being one step ahead of everybody else and not being scared to pull the trigger. I know where my stop is. This position I'm planning on holding for at least 2 days, so I'm very comfortable where I'm at. Now, instead of being greedy, I'll probably take 5 cents or 5 contracts off if we slip below the 49 cent barrier. And then I'll let the rest ride. I'll put my stop at 36 cents, so regardless, I'm still making a profit on my other half. Next, I'm long Schlumberger calls, and I believe I showed you guys this yesterday. I purchased them right when we bounced off of this inflection point of 80.76. And another good thing, that's right where we opened today. I love when I see positions like this. We put in a double bottom, and then you see buying on the open, and we don't get below yesterday's low at 80.65. We hit 80.60, but right after we did that, we popped up. And you know, a lot of times on the open, it's very erratic, and they'll try to, the bulls and the bears fight it out, and whoever wins, that's pretty much the trend for the rest of the day. So yesterday, I bought 5 contracts at 80 cents. And then again today, I bought another 5 contracts at 80 cents. So my average is 10 contracts of the January 85 calls, and I'm up 15 cents, and then that's $150, not counting commission. That's just profits. And my target for this is $1.10, and I'll sell all of it. And the last one I am long is GDX calls. I bought 5 contracts yesterday at 80 cents, and then I bought another 5 today at 55 cents. So my average is around 66 cents with 10 contracts. My target is to get back up to $1, and my stop is 52 cents. So I'll keep you guys updated on these trades for tomorrow. Taking a quick look at the charts that are always on our watch list, one being ACAM. You see this move, that's why I got long the calls. 46.72 had been holding over the last few days. It was consolidating, and it was just a low risk trade for me. I think that if we get over 48.62, there's a good chance 50 will prevail. Next, we're looking at Abercrombie. Abercrombie short-term bearish. We're below the 20-day moving average, and we had a big volume spike to the downside along with a massive decline yesterday, which brought us below the December high. So short-term bearish on Abercrombie. Apollo. I'm not in this position anymore, but they had a nice bounce off the 39 level, and I most likely I won't get back in this unless I see a lot of volume come through and the momentum players try to run it up to the 41, 44 to 42 level. That's because earnings are very close. I don't want somebody to throw a downgrade and this thing drop overnight. We've already seen what could happen. Next is Ben. We rode this one and we got out. It was a day and a half trade, and as you can see what happened, they had a large down move right here over the last 2 days, and they gapped it down today and we hit a low of around 108.70. So what you need to pay attention to is whenever you see something really declining, start counting the down days. Whenever you see something more than 6 down days, you should start looking for a bounce. Don't buy it unless you see the bounce on heavy volume like you saw right here. This indicated that people were covering and the move was over. You see this big bar? That's institutional size. So you keep a lookout for that. We consolidated, broke over the high, and then we got a 2-point move in a 2-day time span. Next we're looking at Coach. And Coach is interesting because his 52.89 level is actually from a few years back, the '07 high. So right now we're holding below that. I was thinking that we would hold over that or at least get some buying off of it. That didn't happen. So it looks like Coach was juiced up during the holiday season for the retail sales. It usually always happens with the retailers. I know a lot of women that got these for Christmas, but it seems like the hot thing right now is Vera Bradley. Everyone's buying their bags and stuff. But besides the point, we're short-term bearish on Coach unless we get above and hold 52.90. Next is CSC. CSC has a bullish trend and we're holding above 49.78. And now we just, if you're long this and you got long on that 49.78 breakout, you should just keep moving your stop up because this thing looks like it could definitely reach 52 within the next week. Next is Cisco. And I'm proud of everybody who's still holding this that watches the videos. You guys really didn't sit through a lot of pain, but I know a lot of you thought that it was going to come back down here. Usually when you come off a bottom on a strong stock that has strong fundamentals, you just keep rallying. And I'd say at least 75% of the time you at least retest the gap. I'm not saying that we're going to bust through it because you know there's going to be a lot of supply here. And if you are long this, you might want to start taking profits if you get another 15 cents out of it. At least scaling in and play with the house's money and keep your stop tight because they could slam it when we get up to the 2096 level. Gilead's getting a nice bounce. You guys know I'm a fan of this stock. We had this down move. Once we broke the trend line, we were shorting it here. And now you see some buying. And Gilead actually reports this month. They report on the 26th. And last time they reported, last quarter, they actually blew away earnings. So this buying right here could be some people positioning themselves in this stock before earnings and just trying to get good fill prices. Goldman Sachs is my hero. This is a 2-year chart. We have that high sticking up there at 190 from back there in September of 09. Looking at a shorter time frame, we're consolidating above the 171.14 level. So basically we're bullish on Goldman. Mosaic beat earnings yesterday. Right now they're really not doing much. As long as we hold above 74, we could probably break out. 78's a big level for this, so keep that on your radar. It has a lot of a lot of options purchased on that strike. NYX, I called this as a long over 30.57. If you're still long this stock, off my recommendation, stay long. Nothing's telling you to sell. Maybe 31.50, take a little off, and then just keep a tight stop. OI was another one of our long plays. If you guys got long over the 30.67 level, keep your long on. There's nothing telling you to sell right now. Just keep this in mind, guys. The higher we go on the market, the more speculative you're getting when you're in a position to just keep letting it ride. No one ever got hurt by taking fast profits. And over the past 2 weeks, I've actually been hurting myself by not taking fast profits. Certain markets, when the valuation and timing is right, it calls for holding your position for a longer time span. But when you've had an incredible move on the market, you have to be a little more cautious about how you put your stops and how far you let your stocks go. PCL, we were in for the pop over 37.50, but right now we're consolidating around the downtrend from April. So if we could hold over that and get over this 38.5, I think we're going to break out to a higher high and potentially we'll get around 39.40. Pulte Homes added a little more this morning, around 770. So my cost is around 755 in Pulte, and we're really trying to get back up to this 850 level. I'd be happy with 825. I'd probably sell half, 3/4 of the position here and let the other quarter ride. PPL stuck on this downtrend. I could pull this up off a 2-year chart, and that's back there, right there, December of 09. So if we could break out of this, I think PPL will have some more room to go to the upside. Rigs getting some buying today. I wouldn't get long rig, even though we did hold up at the 50-day moving average. It just has a lot of news on it. This is institutional volume that's poking it above the 20, but this just isn't in my style right now. Valley, very, very, very strong stock. 34.75, which was the April high. We're over that now. Looking at a 3-month daily chart, you still see us making higher highs on a daily basis. As long as we hold over 34.75, look to keep buying this thing on dips. Whirlpool, as you guys know, they have a lot of call volume on this. They bounced it right off the 20, and we're up a point today. LVS is flirting with this downtrend. If they break out of it, 50 will probably be approached soon. Me continues to rip higher. This thing is just really strong. 54.54, that's the critical level. We held that support, and now we're just moving up. We bounced right off it beautifully today. So I think 60 is a reasonable number for rig. RIM's getting a little buying today off the 50, looking good, poking its head above the 20. If we could get past the 60 psychological number, start looking for more upside targets on RIM. RRC, now we came up, and it looks like this could be a double top right here. 46.19 is the level, and I think that potentially you could get a low risk trade on this if you wanted to short it. I wouldn't short it right here. Maybe let it bounce back up a little bit, then short it and put your stop at 46.20. Looking at X, and you're getting a little buy-in. Remember, the 62 half calls are very active, but I just find more valuation in MT right now. And FCX having another short down day. It's down about 50 cents right now. It bounced off the 115, which is right around where the 20 is. A lot of people are getting bearish on this thing, so just keep your eye on it. If we break the 20, it could be a pretty intense down move to around the 50-day moving average, or at least the November high of 107.50. And looking at SanDisk right here, SanDisk is bouncing off another support level. This thing proves to be strong. Looking at a 5-year chart, our next level is going to be 60 if we hold over 50.55. And now we're looking at the crude oil chart. You see them blasting this thing up. 88.62 we opened at. Now we're trading at 90.50. Almost a 2-point move. Crude oil is going up. So every time it dips down, don't get scared by this. Why do you think I'm long Schlumberger right now? And I might even start looking to get long some more strong oil stocks. Look at Exxon. Exxon's had a crazy move, continues to make higher highs, and then they thought they were going to bring this thing down before they snap it right back up. This one probably tracks crude and correlates with it a lot better than the other ones. Alright guys, I went over the video time. Enjoy the rest of your day and good luck trading.